This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with mixed news, but the underlying vibe is positive. First in the US, all eyes are now on tomorrow's August non-farm payrolls report. Analysts expect a rise of 160,000 jobs, but today's precursor ADP employment report sharply undershot that level, suggesting only 99,000 jobs will be added. If that is the case, it'll make it the smallest gain since 2021. This data has clouded financial markets today. A jump in reported layoffs in August added to the mood, but to be fair, it only rose back to normal levels. But there was good news about the US economy too. The level of jobless benefit claims last week fell when a rise was anticipated. And the ISM Services PMI rose more than expected on the basis of better new order levels. That was backed up by the companion S&P Market Services PMI. And the latest update for American productivity for the second quarter was particularly positive, with a strong rise. So you'd have to think that there might be upside in tomorrow's labour market data. We will know soon enough. And wages in Japan rose by 3.6% year on year in July, slowing from a 4.5% rise in June, which was the highest in 26 years, since January 1997. Markets expected a July rise of just 3.1%. And EU retail sales volumes rose in July, the fourth rise in the past 6 months. Better yet, they were higher than a year ago on a volume basis. And German factory orders for July were another overnight surprise. They bounced back in June, and July was expected to be weak, but in fact a good rise was posted again in July. And it might also surprise you to know that after being hooked on Russian energy, the Germans have made a substantial shift away, not to other fossil fuel suppliers, but rather to renewables. More than 60% of electricity production is now by renewables. And the overall energy intensity in the German economy is declining. That is, it's improving. Both are huge shifts for Europe's largest economy. And Australia's merchandise trade surplus rose in July to be its highest since February, as exports grew to a 5-month high, while imports fell to a 3-month low. But the iron ore price took a sharp tumble yesterday. While that isn't great news for Australia, it isn't all bad. They have advantages over their rivals in Africa and South America in both freight costs and mine productivity. Although China's media mouthpieces are talking up the prospects for recovering steel production, their trade association is warning that any short-term bump will probably be just a flash in the pan. Bulk freight rates continue to rise, however, and global container freight rates are still extremely high, essentially because of the Suez Canal Horn of Africa security issues. But they did fall 8% last week, but they remain 236% higher than pre-pandemic levels. China to Europe rates fell quite sharply, but Trans-Pacific rates didn't move much. The US Treasury 10-year yield is now just on 3.73% and down another 4 basis points from yesterday, and the price of gold will start today up $10 at $2,513 an ounce. But oil prices are down $1 at just under $69 a barrel in the US, while the international Brent price is now just on $72.50 a barrel. And that has forced OPEC to delay its planned rise in production. And the Kiwi dollar starts today up 30 basis points from yesterday at 62.3 US cents. Against the Aussie were 10 basis points firmer at 92.4 Australian cents. Against the euro also up 10 basis points at 56 euro cents. That all means our trade-weighted index starts today at 70 and up 10 basis points from yesterday. And the Bitcoin price starts today at $56,336 and down 2.7% from yesterday. Volatility over the past 24 hours has been moderate at just on plus or minus 2.3%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.